What if I told you that the single biggest and most important purchase of your entire life isn't actually the house you buy? It's the loan you get to pay for it. That's right. For most of us, buying our first home feels like the final boss of adulting. It's exciting, it's terrifying, and it's full of confusing terms and paperwork. But the key to winning that game, the key to building a secure financial future, is understanding the mortgage. Today, we are going to pull back the curtain on this mysterious process. This isn't going to be a boring lecture. This is your simple, step-by-step guide to conquering the mortgage mountain. We're going to turn confusion into confidence, so you can walk into a bank or talk to a broker feeling prepared and powerful. So, let's start at the very beginning. Before you even think about looking at houses online, you need to do a financial health checkup. Think of it like preparing for a marathon. You wouldn't just show up on race day without training, right? Getting a mortgage is the same. The two most important things lenders will look at are your credit score and your debt-to-income ratio. Your credit score is like your financial report card. It's a 3-digit number that tells lenders how reliable you've been with paying back money in the past. A higher score tells them you're lower risk, which means you'll get better interest rates, saving you tens of thousands of dollars over the life of your loan. Your debt-to-income ratio, or DTI, is even simpler. It's just a measure of how much of your monthly income already goes toward paying off debts, like car payments, student loans, and credit cards. A lower DTI shows lenders that you have enough room in your budget to comfortably handle a new mortgage payment. Once you have a good handle on your numbers, it's time for step 2, and this is probably the most important step of all: getting pre-approved. A mortgage pre-approval is your golden ticket. It's a letter from a lender that says, "We've looked at your finances, and we are willing to lend you this much money to buy a house." This is a game changer. Why? Because it turns you from a window shopper into a serious buyer. When you make an offer on a house, that pre-approval letter shows the seller that you have the financial backing to close the deal. In a competitive market, it's what separates the dreamers from the buyers. More importantly, it tells you exactly what your budget is. It stops you from falling in love with a house you can't afford. Okay, you've got your pre-approval. Now for step 3, the down payment. This is the part where you put some of your own skin in the game. You've probably heard the myth that you absolutely must have a 20% down payment. And while putting down 20% is a fantastic goal because it helps you avoid something called private mortgage insurance, or PMI, it is not a requirement for everyone. This is a huge relief for many first-time buyers. There are many loan programs out there, like FHA loans backed by the government, that allow you to buy a home with as little as 3.5% down. There are also conventional loans that allow for 3% or 5% down. The key is to talk to your lender about the programs available to you. Don't let the 20% myth scare you away from your dream. This brings us to our final step, step 4, choosing your adventure. You need to pick the type of mortgage that's right for you. The two main characters in this story are the fixed-rate mortgage and the adjustable-rate mortgage, or ARM. A fixed-rate mortgage is the most popular choice. It's like setting your thermostat and locking it for 30 years. Your interest rate, and therefore your principal and interest payment, will be the exact same on day 1 as it is 30 years from now. It offers incredible stability and peace of mind. An adjustable-rate mortgage, or ARM, is different. It's like a thermostat that starts at a low setting, but can change over time based on the weather outside. Usually, you get a lower interest rate for the first few years, say, 5 or 7 years. But after that, your rate can adjust up or down each year based on the market. It can be a good option for some, but it comes with more uncertainty. So let's bring it all home. The journey to buying your first home can feel like a climb up a huge mountain, and the mortgage process can feel like the steepest part. But it doesn't have to be scary. By following these steps, checking your financial health, getting that golden ticket of pre-approval, understanding your down payment options, and choosing the right loan for you, you are building a clear path to the summit. A mortgage isn't just a debt. It's the most powerful tool most of us will ever use to build a foundation for our lives and create long-term wealth. And by understanding how it works, you're not just buying a house. You're making one of the smartest investments of your life.